This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Fantastic aspect to the trading strategy called trend following. It's something that most of us don't ever think about. Most of us, we see the Wall Street Journal, Barron's, CNBC, Bloomberg. We hear about the S&P, we hear about the Dow, we hear about the NASDAQ, and that's it. If you're in another country, you hear about your stock index, and that's it. The vast majority of everyone in the investing population only know their stock index or perhaps individual equities. That's it. That's the sum total of their investing universe. What if I told you that the best, the top earners, don't look at it that way? They don't look at it that way at all. The top earners, the most profitable investors and traders, think wide. Let me put that on the table really quick, what I mean by wide. Yes, they think about individual stocks, Apple, Tesla, Goldman Sachs, etc. They think about the stock indices, S&P, Dow, NASDAQ. But they also think about gold, corn, palladium, the Swiss franc, the Japanese yen, soybean oil, silver, copper, crude oil, bonds, wheat, all of these markets that at least 99% of the audience out there would never even think about. Those are part of the trend following world. Those markets are part of the trend following world. Those markets are markets that everyone should be in. Now, I immediately know the reservations, the hesitations. Mike, you must be freaking kidding me. How am I going to trade gold? I don't know anything about palladium. Are you kidding me? Also, crude oil? How the hell am I going to trade crude oil? At least with stocks, being facetious here, I'm paraphrasing what the person that is coming back to me and being skeptical would say. Look, I can at least buy and hold the S&P. That's what I'm supposed to do. I can make a bet on Facebook because I think Facebook will rule the world. So I'm going to go long Facebook and hold on to it forever with no exit strategy. Yeah, I get all that. But I don't get gold. Do I buy gold if the world is ending? Coffee? How the hell am I supposed to trade coffee? Does that mean I need to go to Colombia and study weather patterns? All of these markets that I just mentioned absolutely would cause at least 99% of the investing audience an aneurysm if they had to think about trading them. Heart palpitations. They just couldn't do it. They would immediately think, I must know all the information there is to know about Kansas City wheat. I must know everything there is about the Japanese yen to possibly trade it. And then even after I know all that, if I could know all that, where do I do this? Can I trade or invest in the Japanese yen just like a stock? The short answer is that all of these markets that I'm talking about right now, this diverse collection of markets, everyone can trade through a handful of different financial instruments. Number one, for most people, ETFs. ETFs give you the ability to buy and sell the markets that I'm talking about straight away. Straight away, already in your whatever that account is, E-Trade, Schwab, I don't know. I don't care. It doesn't make a hell of a beans difference, but you have access to it if you trade ETFs. That bit of insight alone is huge. The fact that you now know the instrument that allows you to partake in all these different markets that you would have otherwise said, no freaking way, I'm not touching that. It's not just ETFs. Leaps options, long-term options, not options that require you to know all of the Greeks, none of that, but using options for very long-term positions. And of course, for those of you that grew up in Chicago, the futures markets can also be used to trade all these different markets that I've been rattling off so far. That bit of insight is worth its weight in solid gold. The fact that you can now trade easily all these different markets across the world in your account with no changes, nothing, you're ready to go. That's huge. But the second part of this equation is what I was hinting at in the beginning. How does one go about trading crude oil? How does one go about trading palladium, soybean oil? This is what I thought in the early 1990s. How in the world will I ever have the expertise to trade wheat? Well, here's the kicker. The most important kicker that everyone should know and that hardly anyone does know. The fundamentals of all of the markets that I've mentioned so far are irrelevant for profit. Irrelevant for profit. The only thing you need for profit, I don't care whether you're selling baseball cards, real estate, buying and selling the US dollar, it doesn't matter. What you need for a profit is to go from point A to point B and have more money when you exit. That's it. We all know that when we're dealing in a yard sale, when we're a kid, or the lemonade stand. You just have to make more money. It doesn't make a difference what the market is. And the reason it doesn't make a difference is a very simple switch flip in the brain. I think of it like flipping a switch. What you need to do is imagine, understand, and believe in your deepest places inside you that the only thing that matters is price movement. Imagine that I'm looking across the room right now and about, let's say, 2 meters away from me, about 6 feet or so. On the wall, on this white wall, 5 charts. The charts show a nice uptrend, several nice uptrends. One chart shows a nice downtrend. One chart shows this kind of up and down whipsaw action. You get the picture. I can look across the room at those charts and know immediately. I don't need to know the name. What is the usefulness of the name? That's huge. And I'm going to hazard a guess that at least 99.9% of the investing population, and I'm not exaggerating, do not have that awareness. And if you don't have that awareness, you're immediately saying, well, how the hell do you trade those? Look, trends exist. Markets go up and down. It doesn't matter the name. What's a market? A market is simply buyers and sellers getting together and making a price. If 10 sellers come into the room and 10 buyers come into the room, the market is those 20 people arguing and bickering. And they argue and bicker in the context of a price. So the reality is, I don't care about the fundamentals of these markets. I'm playing a video game, and the video game is, hey, that price is going up. Okay. Do I have a strategy for that? If the price is going up on any chart, or the price is going down on any chart, or the price is going sideways on any chart, do I have a strategy for that? Not only do I have a strategy for it, the strategies that have worked for that style of thinking, this trend-following style philosophy, have worked for hundreds of years. The Jesse Livermore Stock Operator book. He's a trend-following trader. He doesn't care the name. All he knows, if that market is going up, he wants to be on board. If that market's going down, he either wants to be out or he wants to be short. He wants to be making money on the downside. Let me put it to you in a more simple fashion. Facebook. Let's say that you knew right after Facebook went public that you should buy Facebook. But let's say you didn't know the name of Facebook. Let's say you didn't know anything about it. You just knew that you should buy this market because the trend of this particular market had the tendency to move up. It was moving up. So you just bought it. You bought Facebook, but you didn't even know the name of Facebook. A couple years later, did you have to know the name? What was the usefulness of the name? Because you didn't want to exit. You wanted to stay long. That's the idea. You want to stay with the trend and make as much money as possible. This style of thinking is what opens up for everyone global markets, which, said in a more simple fashion, opens up opportunity. Instead of only being limited to profit from individual stocks in your home country, which are almost always correlated in a very high degree, which means if you're trading one tech stock or trading two or three, they're all kind of moving in lockstep together. So your risk can get out of whack if you're betting on all three of them at the same time, because frankly, they're all correlated. That's not any good. But if you look at the world in terms of just charts across the room and price action, price movement, momentum, you're now an expert overnight, immediately. The moment you buy into what I'm saying, you are now a macro hedge fund sitting in your apartment, sitting in your house in Timbuktu or who knows where. You are now a macro hedge fund. The question you have to ask yourself, do you believe it? Can it be that simple? Well, nothing in life is simple, but it is a fairly simple process in your philosophy, in your thinking, to go ahead and say, I'm not going to try and pay attention to the fundamentals anymore. There's too many of them. How many fundamentals do you have to know to trade XYZ currency? What would you have to know to trade the Swiss franc? I can't even imagine how many different things I would have to know fundamentally. But if you're trading as a trend following trader, is the Swiss franc going up? Okay, I want to be long. Is the Swiss franc going down? I want to be short. If you can come with me on the mental ride and believe that to be true, you have literally just separated yourself from 99.9% of all market participants. You've just separated yourself. You have just built into yourself for the rest of your life an edge in your thinking. Because again, if you're in Timbuktu and you're going to only trade off the price movement, it's just a little video game you're playing. You're just looking at numbers moving. Who cares what's behind those numbers? Chinese porcelain. Expensive dogs. Who cares? On the paper, once you cross out the name, it's just numbers. And if the numbers are trending up, buy the damn thing until the numbers go against you. And this whole philosophy that I'm talking to you right now about being that macro hedge fund manager, whoever you are, college student to retired, is just believing that that price is telling you the most important thing you need to know at this or that particular time. I think this is one of the most exciting revelations that anyone can wrap their arms around. That you go from being on day one, someone that says, oh my gosh, Warren Buffett told me that I need to be a passive S&P indexer. That's what Vanguard told me. John Bogle, that's what they all told me. I can't do any better than that. I can't possibly do any better than that. No way. I can't even think beyond that. That's what the big guys told me. Well, guess what? There's just as many big guys on my side that are saying, hey, look over here. There's something that you've not considered. And the what that you've not considered is that you are an expert in all markets the moment that you accept that the name of the market and the fundamentals are not important. There's no prediction involved here. It's simply looking at this global cross-section of markets. And look, everyone's got a brokerage account now. Everyone knows about radar screens. This isn't rocket science. The rocket science is the philosophical construct that says you're now an expert in all markets because you've reduced all markets to price action, and all price action is human behavior manifested in the number. That's it. And do you really think human behavior manifests itself differently in coffee prices versus the S&P? No. Now, they might not move together at the same time. So what? That's just more opportunity. And the opportunity, of course, is to trade these diverse markets that you never would have thought possible. There's another nuance to this. As you imagine yourself the global macro hedge fund manager, the ability to go short, the ability to make money on the downside. The hypothetical market XYZ goes from 100 to 50. You make 50. Now, the point of this podcast is not to explain the ins and outs of shorting the market. But just imagine that you could make equal profit going up a trend and down a trend. That's now in your toolkit as of this moment, as long as you believe me. Now, of course, you can easily go verify all of this. You can verify this across my books, across the rest of my podcast. You can see it in my film. You can see it across my blog. You can see it across 15 plus years of work. But you can also see it in the academic world. The big picture of what I'm talking about today, a globally diversified portfolio that allows you to participate in market opportunities that you never would have imagined, up and down. You can find this across the academic literature today. A few searches on Google and up will pop research paper after research paper after research paper. Now, they're not going to make it as easy to digest, I suspect, as I might. They're going to have their nuances and their jargon, and as most academic papers will have. But if you want to know that the footnotes, the endnotes, the in-depth detail is there to back the big picture philosophical construct that I'm laying out today, guaranteed it's there. It's up to you to take what I'm saying today about global opportunity, about assembling a portfolio that gives you the chance to participate in all of these different opportunities. Because as of right now, you're an expert in every market. You just have to believe that. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.